Amazon, one of the standouts today. That stock up more than 11%. And the move coming after CEO Andy Jassy reportedly leading a cost-cutting review of the company. Yahoo Finance tech reporter Dan Howley is here with more on this. And Dan, I guess, how large could these cuts potentially be?
Yeah, these could be large-scale cuts. We know that they're already trying to trim down the amount of warehouse space they have. They're trying to lease out some of those facilities, even cut back on plans to build new ones. That is prior to what we're hearing now. And so these cuts could be on the scale of just corporate teams. We do have, obviously, a interest in potential cutbacks on the Alexa side of things, which loses money for them because they just want to get the hardware in your house so you start talking to Alexa and then sign up for Prime. So that's a loss leader for them. We have some quotes, though, from spokespeople at Amazon basically saying our senior leadership team regularly reviews our investment outlook and financial performance, including as part of our annual operating plan review, which occurs in the fall each year. As part of this year's review, we're, of course, taking into account the current macro environment and considering opportunities to optimize costs. We also have them discussing Alexa, which they said came about less than 10 years ago, that it was a piece of AI and that they have interest in continuing to invest in Alexa. But you know, their own hardware has always been a loss leader for them. You can have as many Echoes out there as you want, but if you're not charging enough for them, and the idea is to just get more people to sign up for Amazon, then it's not going to do much for you. So, you know, I think we're going to start to see additional kind of cost cutting there, potentially, you know, from their warehouses. But, you know, if you look at something like Thursday Night Football, they're obviously not going to cut that. That gets more people in Prime Video. That's a huge opportunity for them, so they're not going to cut things there either. And they just made Amazon Music more widely available. So, you know, it's about trying to get more people into Prime without also having to spend so much money on that.
And staying in tech, obviously struggles at Twitter don't seem to be going away. They're always making headlines, it seems, these days. So what's the latest now, Dan? Yeah, so now we have pushback from the FTC with regards to Elon Musk. Obviously, we've had a lot of advertisers saying that they want to pull out from the platform. But now the FTC is coming forward. This is after, you know, the different reports that Elon Musk wants to change the verification process, paying for verifications. We saw the other day some people make new accounts and then get them verified and then try to pass themselves off as, you know, Nintendo of America's official account, LeBron James' official account. So there's been a number of these. So the FTC has said, we're tracking recent developments at Twitter with deep concern. No CEO or company is above the law, and companies must follow our consent decrees. Our revised consent order gives us new tools to ensure compliance, and we are prepared to use them. Now, this is referring to a consent decree from 2011 that Twitter had agreed to enter into, which bars the company from misleading users with regards to how safe their data is on the platform for 20 years. Each violation could cost $16,000. Now, how many users does Twitter have? 300 plus million. That adds up to a lot of money.
Certainly does for a company that's trying to cut costs at this point. All right, Dan Howley, thanks so much.